So we've seen a lot of market volatility. It seems to be good for business. Has that carried through into this current quarter as well?
Well, last quarter, it certainly was good for business. As you know, we announced our earnings last night. It was a great beat, largely driven by the market volatility, which, if you're a trading company like ours, there was lots of revenue growth, which was wonderful, so an all-round beat. Has it carried over into this quarter? It's dissipated a little bit, as you've seen, but we still think there's lots of upside left, and we'll see.
In terms of how your clients across your different businesses, across your different services have been responding to the market action we've seen, how would you categorize it?
Well, it was an interesting quarter if we look back a little bit, and that was because, as you saw, the first couple of months were very different than the last month. But on balance, what we saw in general over the full quarter is that with the market correction up until Christmas, our margin balance, for example, dropped sort of one for one with the market drop. Our cash balances went up. And so now what you've seen with the rebound and the relief rally, what you've seen as the margin balances start to creep up again, and the cash balances are going down as our retail and institutional clients are actually putting more money to work.
In terms of the increased activity, who's been doing it? Who's been using your different services? It's
broad-based. What happens at this point in the cycle, longest bull run ever, et cetera, you get a lot more activity. VIX has returned, as we've well seen, to a more normalized level that we've actually not seen in many years. And so whenever you get that, you get this sort of, I think of it as a tipping point between fear and greed. Is there another opportunity? And then another news cycle piece comes out about global trade or potential recession, and it tips over immediately, and as a result, you get a broader level of interest. So, for example, we've seen our retail client use of our education services up 60% in the last year, because they just like to understand what's going on and how can they play that particular market.
We're in the fifth week of a partial government shutdown right now. It's been affecting the SEC, affecting the IPO pipeline. Is it affecting you?
We've asked the question many times. I think there's a few factors. I thought potentially there would be a cash usage for those that have to dip into their cash savings, perhaps, or even their investing cash. But there hasn't been any effect from that, which shows you that the cash that sits in brokerage accounts tend to be I'm keeping this dry for a potential opportunity for an investment, as opposed to day-to-day cash. On the other hand, I think the government shutdown is causing some of that market activity because people are pontificating about what the impact is going to be on GDP growth. And will there in fact be a tipping point here that says, we were expecting 3%, whatever the number is, GDP growth, and the longer this goes on, it takes an effect on the overall economy. And the last one you mentioned, which is just the delay in potential IPOs and the effect that has on the market. And IPOs are well loved in my business, so they really make lots of new entrants to take advantage of those IPOs when they happen.
And of course, it's one more uncertainty in terms of Fed policy for this year as well. How are you factoring in Fed rate hikes this year? What are you anticipating? And what would, say, a pause in hikes mean for business?
Yeah, well, given that we have so much cash on our balance sheet, that is a major revenue source for us, and that has been a significant shift since our last quarter, where you would have seen some more tailwinds from rising interest rates. Now the market is a lot less sure, and so as a result, the impact on us, and we just had our earnings call with our analysts today, was to say, all right, if revenue growth isn't quite as high as we would have expected for the rest of 2019, what are you going to do to contain your expense growth? So we said, look, we will always moderate how we invest in our own future depending on the revenue growth, and so we will make adjustments as it makes sense to do if the revenue growth isn't there.